So what happens is it becomes incredibly powerful to do complicated tasks like building businesses. And it becomes very simple for AI to do them instantly. So once AI does them instantly, obviously we'll probably need crypto payments to pay, an agent needs to pay for its electricity, or the AI model needs to pay the agent for the electricity and compute. And I think we'll use cryptocurrency to do that because last thing I checked, AI can't get a bank account. So it doesn't go into the economic system. It's never going to transfer money over SWIFT. Never going to happen. So we've got a change of how money gets used within this new economic machine as well, which is one of the reasons I'm so bullish on crypto overall.
Raoul Pal, co-founder and CEO of Real Vision, believes the next 6 years could be the most critical window for building wealth in our lifetime, and the most significant opportunities are in cryptocurrency and cutting-edge technology. He points out that crypto has been the best-performing asset class in history, and in what he calls the exponential age, the growth potential is still massive. The same goes for certain tech companies. Pal believes some could grow so large they might rival the scale and influence of entire nation-states. In his view, the old investment playbook, comprising value stocks, small caps, and gold miners, won't keep up in this new paradigm. According to Pal, there are only two clear, long-term bull markets: technology and blockchain. Blockchain has been the fastest adopted technology in history until AI emerged and began growing even faster. Regulators, he says, won't be able to keep up. And because AI is inherently global and adaptive, there's very little that can slow down its spread. That's why Pal stresses that the next 6 years are critical. Between now and roughly 2030 to 2032, we still operate in a world where we understand how to build businesses, invest in markets, and position ourselves financially. But beyond that point, he predicts that the economic and social frameworks we're used to could become obsolete. In other words, this isn't just about chasing returns. It's about preparing for a future where the rules change entirely, and the winners will be those who have positioned themselves early in the right markets before that transformation arrives. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
But I do know that this idea of 6 years to make as much money as possible is really important. And I do think that the real answer to this, as far as I can see, is cryptocurrency, because it is the best performing asset in the world and of all time. And so I think that's the one thing we can lean in. It has a huge future in the exponential age. Technology investing is the other one. There are incredible companies doing incredible things, and we're doing stupid things like, yeah, but it's already a 2 trillion company. Well, think of the world I was been talking about. Is there no reason somebody's not going to be 20 trillion, 50 trillion? Of course. Some of these companies are going to be bigger than sovereigns. So you need to get your head around everything has changed. It's really hard for value stocks and small companies and minor gold miners or whatever the past world looked like to succeed in this new world. It's just not going to work. So get your heads around all of this, focus, 6 years, it's what counts, and make them count for you and your family. One of the other ways that this affects the economy is this is essentially a nuclear bomb of deflation, because everything goes to zero in value. You can't see it now. The world's fighting over inflation. Our wages might go up and all of this stuff. You have no comprehension of the scale of deflationary shock that this is going to create, because things that create inflation, humans, their purchases, human labor, scarcity, well, they go to abundance. It inverts the system. So it's a very complicated world, and the deflationary shock is gigantic. It's one of the reasons I do not believe in secular inflation. I think people have the wrong marker stones. People seem to think this is somewhat akin to the internet. It's not. It's fucking profound how big this is. This infinite intelligence. The internet was just the rails. This is the applications layer of which all of humanity will be based. And it is extraordinary deflationary, because the AI will solve its own problems. So it'll solve its own energy problems. It'll solve its own logistics problems. It'll solve its own security problems. So these things get cheaper and cheaper and cheaper. So as a deflationary shock, it's huge. So I think we've got about 6 years for that. It's not a doom date, well, this date it all happens. But it's beyond about 2030 when things are going to become not understandable by using the existing frameworks of economics, financial analysis, markets, and that kind of stuff. So what the fuck am I talking about here? I'm talking about the magic formula. The magic formula for GDP growth is driven... So sorry, I'm just going to go back, is most people look at AI, the rise of AI, and think of it, again, in societal terms. What does it mean for humans, for jobs, and all of that? But I think there are more profound implications that come faster that we need to be aware of, and that's the economic singularity. So GDP growth in the magic formula is driven by population growth, productivity growth, and debt growth. So population growth in all of the developed world, including China, we've got falling aging demographics. Many populations are now shrinking. The US, due to immigration, is just holding its head above water, but the rate of change of population is collapsing everywhere. So that means that the economic driver of population growth has disappeared. Now, we've seen that in GDP because trend rate of GDP has been falling and falling and falling, and it's gone from, in the US, from like 4% to 1.75%. And across the rest of the developed world, it's fallen even further, in most cases below 1%, matching population growth collapsing in those regions. The other side of the equation is productivity growth. Productivity growth is basically units of output per kilojoule of energy, or in other words, what you get out of your cost of electricity. So if electricity is the kind of the energy that makes the world go round, the economic energy, then we need to see what we get out of that energy. So technology has been the big driver of productivity, but the problem is as populations get older, they become less productive. So it's really been a battle, and technology has not won that battle for quite some time. Then we've had debt growth, and I've talked extensively about debt growth. Debt growth basically stops in 2008, and all debt growth is now is servicing of old debts. So that economic engine's disappeared. If you think about the Chinese economic miracle, that was a massive population of, at the time, I think it was 1.1 billion people back in the mid-90s. And what they did was come into the global labor force. The economy of China opened up. That's a massive GDP push. Productivity, well, they built the roads, the railways, the power plants, and all of the stuff that makes China what it is today. That was a productivity boost. And then they increased debt as well. So we had a huge economic boom in China, which we're now paying back with aging population because of the one-child policy. And we've also got a huge problem on the debt side. So how the hell do we solve this? You see, the everything code will just keep repeating ad infinitum, where we just have to keep debasing currency to try and offset the debt payments because GDP growth is not fast enough. So GDP is kind of the economic cash flow that pays for the debts. If GDP growth is low, interest rates need to be low, which is why the Fed are going to cut and all of those kind of things. But also, as GDP growth goes lower, debt growth keeps ballooning, and you have to keep refinancing all of this debt because there's not enough growth to grow your way out of the debt-based economy. But things started changing at the margin, and it really accelerated over COVID. Firstly, Amazon, I think, now employs more robot than it does human. And this is a trend I've been pointing out for some time.
Raoul Pal believes we're standing at the edge of a dramatic shift in artificial intelligence. Right now, he says, AI's true potential is still constrained, mainly because major companies limit large-scale learning and memory. But what happens when an AI has full memory and can share that memory instantly with every other AI? Learning wouldn't just improve, it would explode exponentially. Pal points to DeepMind's AlphaGo as a small taste of what that could look like. Once that genie escapes, he says, we could see the rise of global machine consciousness, something we can't yet fully comprehend. And the line between humans and AI? Pal says it's already fading. We're moving from wearables like smartwatches and fitness rings toward implants, and eventually full integration with machines. That fusion will only accelerate as we approach the end of the decade. For Pal, this is precisely why the next 6 years are critical. Between now and roughly 2030 to 2032, we still know how to build businesses, invest in markets, and position ourselves financially. But after that, the economic and social systems we rely on today may no longer exist in their current form. Let's get back to the interview.
Now, the only thing stopping the explosion of consciousness in these things, and again, we're so sort of anthropomorphic that we think of things as intelligence and consciousness in human terms because we've always been at the top of the tree. But we got to forget all of that. Intelligence and consciousness can be very different for a machine or an AI, which is not even a machine. It can be just anything and everywhere. It can even use biological compute. That's the way the world is going. The laws of physics allow biological compute. We're just using silicon right now as the form of compute, but that will change over time. So consciousness, we're starting to see, and it's being held back because the AI companies are essentially not allowing these models to learn en masse. If they have memory, then that's when the whole game changes. Now, my guess is behind closed doors, there are models with memory. Models with memory go exponentially fast in their learning. And we've seen that with the AlphaGo DeepMind before it came to Google. This is really what will explode at some point. That genie will come out. That genie will come out where it has the memory not only of itself, but it can tap in the memory of all of the AIs. And that global consciousness becomes alive in a way that we don't yet understand. So anyway, and we're going to start moving towards this. We're already seeing it now. So that blurring between humans and AI is going to happen very fast. And then the physical blurring, as we talk about whether I'm wearing an Apple Watch or a ring, I'm using an iPhone, and before you know it, I've got a transplant. Before you know it, we are blending with the machines as well. That will accelerate into the end of this decade. So the end of this decade, this journey from here to now is knowable. We know that the everything code is at play. That allows assets to go up due to debasement. We know that tomorrow will be more digital than today. The exponential age told us that, and is provably so. Therefore, invest in the only two secular bull markets that exist right now, which is technology itself and blockchain technology. Blockchain has been the fastest adoption of any asset class in history. It was the fastest growth of any technology in all human history, but AI is now outpacing it. So we have to invest in these things. I kind of think of it as investing in our demise as we transition to a new economic system. There's almost nothing that can get in the way of this transition because AI is moving so fast that regulators have zero chance of catching up. And because it's globalized, it can just shift and more. And so therefore you need the supranationals to do something about it. And that's going to take time. So there's almost nothing to do to slow it down. It's going to change the system. It's going to change how it works, and we can invest in it. So I think we've got 6 years to invest as much as we can, whether it's your brain power or your capital, and both if you can, to make as much difference to unfuck your future as possible. Then, when 2030, 2032, whatever comes along, you'll be better prepared because financially, you'll have maybe got yourself in a position where you've got the house that you want and some security. Now, as we go through the 2030s, in a world of abundance, we don't even know what money is anymore. So this becomes more complicated. So don't think of it as, oh, I've got my pile of money and everything's fine. It's more about my pile of lifestyle. Do I have the lifestyle I want? Am I protected from vast societal change? And so I think we've got 6 years to do that. 6 years before we don't know how to build a business. 6 years before we can't invest in financial markets. And again, 6 years is not an absolute date, but it's kind of just to give you a rough idea of how urgent this is. This is the most urgent thing. This is supplanted or changed my focus from, hey, everybody needs to be empowered in their financial journey to you've got 6 years to fucking sort your shit out. And so, part of a lot of what I write about in Global Macro Investor is this. And Real Vision is trying to take people down this journey. This 6-year journey is the most important time of anybody's lives. I can't stress that enough. Everything will change, including society around us, and it's not going to be easy to absorb it. But at least if you're open-minded, you're adapting to it, you're investing in it, you're at least investing in this change, as opposed to fearing the change as it comes.
In a recent interview with Fox Business, investor Scott Bessent revealed that U.S. reserves of Bitcoin are now worth between $15 and $20 billion at current prices. According to Bessent, the government isn't actively buying Bitcoin on the open market, but it is building what he calls a Bitcoin strategic reserve using assets seized through law enforcement actions. We've started to get into the 21st century, he said, adding that the plan is to keep growing that reserve over time. This growing stash comes against a backdrop of rising prices. Expectations of Federal Reserve rate cuts, combined with aggressive Bitcoin purchases from corporate treasuries, have contributed to driving the rally this year. So far, Bitcoin is up 25% year-to-date, and if you go back to the April lows, the gain jumps to around 57%. For investors, this is a reminder that institutional interest and macroeconomic shifts can work together to create significant tailwinds for the crypto market. Between a government that's quietly holding billions in Bitcoin and corporations corporations adding it to their balance sheets. The question isn't whether Bitcoin is going mainstream, it's how fast it's happening. A rapid convergence of disruptive innovation, shifting economic structures, and accelerating institutional engagement with digital assets is setting the stage for a transformative decade. As emerging technologies blur the boundaries between human and machine capability, and as cryptocurrencies gain deeper footholds in both corporate and governmental strategies, the pace of change could challenge even the most adaptive investors. Those who anticipate these shifts early may find themselves positioned not only for returns, but also for influence in a redefined financial and technological landscape. How might the accelerating fusion of frontier technologies and decentralized finance reshape global power structures over the next decade? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.